lots of concerns about the Chinese economy, but also lots of announcements coming from Beijing on how to shore up growth. Are people just being too bearish on Chinese markets right now?
I think it feels that way in terms of the bearish sentiment. And I think we have to be mindful that the recovery we're seeing this time around is very different to the previous recoveries we've seen in China. And even the policy response and this focus really on long-term growth and sustainable growth is different to what we've previously seen. So I think it's just this resetting of expectations. And you're beginning to get the sense that investors are taking this into consideration now.
How big is the valuation gap between China, the rest of Asia, between Asia and the US, for example?
Yeah, I was just looking at the other week, and it's quite staggering. Over a 20-year period, Chinese equities, from a PE perspective, are trading at their largest discount to Asia. And then the discount between Asia and the S&P 500 is also huge. So even from a valuations perspective, all the bad news seems to have been priced in. And so, I'm not saying there's going to be a catalyst that we should be mindful of, but really, if we see this emergence of confidence with the consumers, this animal spirits coming back with companies, then it should set a base or a floor for the market to indeed continue to recover even more, I should say.
But Catherine, that's kind of the uncertainty, right? Is this a cyclical slowdown or is this a structural slowdown? And, even in the former, is there a chance that this sort of deflationary mindset, the confidence has already been embedded? Is that a concern? And I suppose, is there a way to navigate some of the stocks and with the earnings that might be more exposed to that than others?
Well, from a fundamental perspective or a stock perspective, it's really about ensuring that you have an exposure to those companies that have a large margin of safety. And that means, a cross-section of companies with the earnings. We've seen some, fairly good results or okay results out of, areas like industrials, e-commerce, whereas we've seen a bit more pressure in those areas which are really, really favored, like EV and solar, for example, and wind. So it's about really establishing a position or positions in companies that are there for the long term. So even if you have these cyclical periods of up and down, these companies continue to survive. And it's about, ensuring that they're well-run businesses, have strong balance sheets, good quality management teams, and have the ability to grow.
At the same time, we've seen, investors kind of looking for alternatives within that EM kind of space, right? India has been a popular alternative for redirected flows out of China, and I think there are sectors within the Indian market that you still find appealing.
Yeah, some of the Indian banks, for example, they're very much, driven by deposit rates, and they're not too complicated in terms of the bank structure. So they still look attractive. But we are mindful that Indian valuations are looking very expensive. And you tend to see this pair trade between China and India, and India's really seen a lot of positive inflows over the year. But we might, need to take into consideration how much is factored in terms of potential negative news. We've got the election coming up, and so, it just feels a little bit toppy at this point in time. And again, with Chinese valuations looking so attractive, that's where we're really finding the opportunities.
Catherine, we've also heard positive calls on Japanese banks, especially on the expectation that the BOJ will move more drastically later this year. Where do you stand?
Yeah, again, when we look at Japan, we've seen a lot of favorable information flow this year. Minority shareholders have been rewarded, so the shift in mindset in terms of corporate governance has really come to fruition. But for us, when we look at Japan, a lot of the opportunities we're seeing is more in terms of the small cap space. A lot of innovative names are coming through. So the large cap names, especially the exporters, are indeed losing a lot of market share to, again, the Chinese companies. So tend to really focus on the small cap opportunity basket in that market.
Is that also because we're expecting the Japanese yen to get stronger if the BOJ moves?
Yeah, exactly. And again, there's a lot of sort of inflows that have gone into Japan. So should we see any sort of higher risk coming through from a global perspective or concerns about Japan, you could see that flight to quality move out. So again, across Asia, what's becoming more and more apparent over the years is that domestic demand and domestic makeup of the market is increasing. So you don't see such abrupt movement should we see any global sort of concerns arise.